How far off do you think we are having VCs or funds which are Bitcoin denominated, or the investments are Bitcoin denominated, the returns are Bitcoin denominated?
I think we're very far from that.
Is there any kind of hybrid in there? Like, for example, our football club we have to do everything. Everything we do, we have. I should show you the way I track everything. But every line item in kind of my financial tracking, I have a Bitcoin and a pound column.
I think it's going to evolve gradually. We have this debate a lot with prospective investors, and it's a discussion topic for current investors about, can you outperform Bitcoin? Because the people who are considering investing in our fund oftentimes understand the tremendous upside potential that Bitcoin has in terms of purchasing power, price, however you want to call it. And so then they naturally ask, well, why should I invest with you guys instead of just holding Bitcoin, because Bitcoin's going to go up, enormous amounts. And then that raises the point about, well, can you outperform Bitcoin or can you not? And I think it pretty clearly the argument should be that you should, if you're taking on incremental risk, right? There's liquidity risk and execution risk. Can you do it is the ultimate question. I think we've talked about this before.
Will they do it? Would they even put the money in Bitcoin instead? Are they making that genuine either or choice? Because you're raising dollars.
Right. Well, would they? Agreed. I mean, that's one of the things we said is it shouldn't be either or. You should first definitely have some Bitcoin exposure. That the amount that you have is up to you. And then we think it's worthwhile to consider investing in the space. But that generally becomes the type of thought process that companies also go through. It's like, well, I could spend an incremental dollar on marketing, or I could buy Bitcoin, or I could, instead of burning cash, I could try to generate some incremental Bitcoin on my balance sheet rather than investing it in whatever initiative I think might be a good payout. So
that's time preference that we've, as Bitcoiners, have all adopted, right? Most of us are making decisions now about, shall I buy that car? Shall I buy Bitcoin? Or when I got my house, I got the largest mortgage possible with the biggest, like I was borrowing, because essentially that makes me short pounds and long Bitcoin. So they're the decisions we're making. You saying that it's exactly the same decision that we should be making for companies.
Yes. It's ultimately, as you start to understand Bitcoin becomes the opportunity cost. Like, that's another way of saying it. Bitcoin is the opportunity cost.
It's a fair point. Mm-hmm. Yeah, because I'm irresponsibly long personally. I'm conservatively long with every business I have.
Right. Well, it's understandable, right? I mean, I actually wrote a piece about this recently, just about Bitcoin treasury, mainly because the rationale for writing it was to express our evolution and what we've seen as companies' thought processes around like having Bitcoin in their treasury, especially because you're a Bitcoiner. Like Bitcoin companies are run typically by Bitcoiners who want as much Bitcoin as they can possibly get their hands on, but not many of them are holding that much Bitcoin on their balance sheet. And typically when we've invested in companies, even in 2020 and 2021, we were advising companies, well, hey, you should consider using some of the money to put some Bitcoin on your balance sheet. One of the obvious reasons is, well, you're already effectively long Bitcoin just by operating this market. So why not have that type of exposure on your balance sheet as well? But inherently, because of the volatility, that's a risky proposition for a company. Most of them who are burning cash, coming back to that.
Burn rate.
You typically, as an early stage venture-backed company, you're raising some money for a period of time, a year, 2 years, depends on what you're trying to do and what milestones you're trying to hit and what you're trying to build. But typically it's in that time zone. And And then if you were to put a significant amount of that in Bitcoin and there's some volatility, well, all of a sudden your runway could get cut significantly. So that's risky. So what we would usually say is make sure you have at least 2 years worth of cash on your balance sheet. And then if you have some incremental from there, yeah, maybe it makes sense to buy some Bitcoin. Then obviously about a year ago, right, we saw SVB and other banking failures, and all of a sudden we were on the phone 24/7 with the companies that one weekend, saying like, where's your cash and do you have access to it? Can you make payroll the next week?
Were the majority of your companies then banking with those banks?
No, it was a hodgepodge. There were some companies that had local relationships with credit unions. There were some that had SVB. There were some that had some of the other crypto banks that ultimately failed later.
Yeah,
it was like a hot potato. It was like landmines. We had this discussion. We do a portfolio retreat for all the companies every year. We've done it twice now, and this last year in October, one of the big discussion topics we had was banking relationships and just infrastructure for both banking and Bitcoin, and how can companies navigate what's ultimately a very challenging banking environment and share best practices for what's worked for them, and which banks are more open for business for the Bitcoin companies. But for the most part, we didn't have any real exposure there. I mean, even 1031, we had some cash at SVB, which we managed to get that off. But yeah, that was a tricky situation. So going through all of that, it became abundantly clear, well, the initial advice was, well, you should maybe consider having some Bitcoin beyond just your cash reserves to an additional layer, which is you should have a minimum of 2 to 3 months of reserves in Bitcoin, just in case you can't get access to your dollars. So that was the second line of thinking. And then the more recent one, which I've been thinking about, is, okay, if you can meet those, which call that the holding 2 to 3 months of Bitcoin as sort of your near-term working capital needs, is just in case something happens, and then 1 to 2 years, or let's call it 2 years of runway in cash, which you could decide maybe you don't do it just cash, maybe it's a mix of cash and Bitcoin, in which case my argument would be, well, you should probably have a bit more than 2 years. Maybe you have 3 years if it's a mixture of cash and Bitcoin, but call that your medium-term reserves. The longer term, if you've met both of those two, maybe there's a line of thinking that says, well, you should have a percentage of your equity value in your business in Bitcoin. And maybe that can become this incremental way to benefit from the long-term appreciation that we all expect of Bitcoin, because you can look at any longer-term hold period of Bitcoin, and it's going up significantly, right? Like we did a look back on every 4-year holding period since the 2012 halving. This is one of the companies that we're backing did this analysis and suggested that on average, over every possible 4-year hold, Bitcoin's up since 2012, is up 100% a year. And the 95th percentile, so at the top end, you're up 165% a year. And the absolute lowest performance that you would have done is 25% a year. So if you have the capability to hold Bitcoin on your balance sheet and do it for a long period of time, where you can hold it for at least 4 years, then we should expect there to be long-term appreciation in your balance sheet. Now, why might that be interesting? Well, for one, that might be interesting because you could extend your runway, for example, and prevent having to raise money again, or future dilution. Perhaps it's a way to increase like the ability to compete against an incumbent. Say you're this tech company that is emerging in the Bitcoin space, but you're going after the incumbent financial players, and those companies have not yet caught on to Bitcoin. They haven't started accumulating it. Hardly any companies do. And you can establish a major Bitcoin position on your balance sheet relative to them who might come in later. Now, all of a sudden, David versus Goliath, you have a much better chance because in the future, you're going to be much better capitalized.